Good morning, everybody. Welcome to Verified Investing's Game Plan. My name is Gareth Soloway, Chief Market Strategist here. All right, so we're going to get into the nitty-gritty, the details, the charts, the data. That's where the probabilities will give us profitable potential trades. First off, just running through the quick news. Yesterday, we obviously came into the day thinking there were going to be tariffs on Mexico, China, and Canada. Then mid to late morning, we heard that Mexico had reached an agreement to push off those tariffs at least 1 month. After hours yesterday, we heard about Canada doing the same, so 1 month delayed on those. Overnight, it looks like China's tariffs are going into effect, all right? Doesn't mean they can't be pulled back, but right now, that is the latest, and it's ever changing, so we just have to be nimble as traders to make sure that we are watching the charts, as the charts will give us a cue and key. All right, let's get over to the action here in the charts as we get into the S&P 500. What are we looking at here? We basically have, again, this is, and I just want to show you this. This is the Spiders intraday, even with after hours action. This is where we closed on Friday right here. This is the gap down yesterday. All right, then we basically had a close yesterday here. This is after hours, a big move up once it was heard that Canada was also going to get a delay on those tariffs. And then overnight, China comes out, or at least the tariffs come out and stick to China, at least for now. And we have a move lower here. So you can just see gap. I mean, this is just the craziness of the new administration where we're going to get these headlines. And I don't think this is going to stop. I think that, again, whether it's in 30 days from now coming into there, we're going to be wondering, are these tariffs going to go into effect or not? And it's going to be creating more volatility. The positive for us, though, if you're a swing trader, if you're a day trader like myself, you love the volatility, because volatility, if you know how to trade the charts, can breed a lot of profits. Okay, so what are we looking at this morning? Markets are basically flattish. This is, again, where we closed here. And if we draw across, we can see, again, maybe fractionally net green this morning. But again, not a whole lot as we watch to see any new headlines. Couple things to go over here. Just keep in mind, we have the JOLTS number at 10 o'clock. That's the job openings data. That's going to tell us how many job openings in the U.S. are looking for work, or how many job openings for workers there are. And then we also have Google/Alphabet earnings after the bell today. All right, here's your daily chart of the S&P 500. This is the most recent kind of important trend line action I'm watching on the S&P. And again, just taking a note here, we talked about this yesterday, but we have our lows right through here, and we're still above that, and yet we have these highs right down here, and we're still below there. So essentially, what is this? This is a trend, right? So we're still stuck in this longer-term uptrend between this support and this resistance. What we're watching for as technical traders to see the next big move in the market is, do we break to the downside? Or if we break this little double top, triple top up here, then we would go up there as next resistance. So again, just using the charts to tell me what is the most likely outcome. And that's, again, my job is to tell you guys what the charts are saying. It's not to give my personal opinions. Frankly, they don't matter. My personal opinions don't make me money. They certainly won't make anyone else money. It's about what do the charts tell us. And by using that as probability-based data, we can then say, okay, there's a more likely chance of this move in the markets. As long as we follow that, we should generally make money. All right. Now, I want to go over a couple bigger things that continue to concern me. These are things I've talked about in the past. If we take a look at the S&P on a longer-term basis, and this is a chart that I have to go to the big board to take a look at, right? So this is a chart going back to 1929 on the logarithmic scale. And the reason I bring this to your attention is that we're continuing to watch and see, are we at a major cycle top, or is there just more upside that's going to continue indefinitely? And this is a chart here that this is your 1928, 1929 high just before the Great Depression and the stock market collapse, right? And then the next time, if you draw and connect a trend line, this is your .com, right? So .com high right here, which was a huge, massive internet bubble. And then lo and behold, this is where we currently are, right into that trend line. So listen, maybe we break through this trend line. Maybe this is just a stopping point before a bigger move, but we do want to be cognizant of the fact that we are into this line, and what it tells us is it's a pivotal point. So we might look back in 5 years and say, hey, remember when? You know, either, oh man, once we broke that, we really ripped up. Again, that's not what I think is going to happen, but remember, what I think doesn't matter. What are the charts telling us? But right now we're below it, so you go with the reversal and rejection on the charts off of that. Okay. All right, so that's an interesting chart there. The only other one I want to kind of draw attention to is the NASDAQ composite. The reason the NASDAQ composite is also interesting is because if we look at this, we have, this is your 2021 high, all right, and this is the regular chart, not the logarithmic chart, the linear chart. And we look here, COVID low, bear market low right down here. And so where are we? Where was the last high on the NASDAQ? Right at that trend line. And so as of now, remember, the rule is, as a technical trader, you go by levels or resistance on the upside. So when you're hitting a level, it is resistance until it is broken. So on these charts I'm showing right now, we are not breaking. We haven't broken them yet. So we have to go by the assumption they are resistance until proven otherwise, right? That's, again, the data-driven method. All right, let's get into some chart action here. Palantir, what a move on Palantir, folks. Blowing away earnings. Their guidance was great as well. Notice this trend line right here. I'm going to show you in a second what that is. It's right around the $98 to $100 level, but right now Palantir is trading up almost 25%. This is a level I'm watching. So in the past, we've in this earnings season, in fact, we've had many stocks that have these parallels, and oftentimes they gap above the parallel. But almost always, and I say almost because it isn't always the case, oftentimes gaps above, you'll see price come back underneath that parallel and close there. Now listen, this isn't going flat or negative on the day. I mean, that would be crazy. It was great earnings, great guidance. But I'm curious to see, do we come back under this $100 level by end of day? That would be my assumption, which means potentially there's a short opportunity. I'm looking more at the 105 level to use that kind of pseudo even number. But again, if we get up to 105, I might nibble on a short in the Apex Live day trading room and see if we can't pull back to 100 or under 100. But what a move on Palantir. Spotify also up on earnings this morning. Great gains there. All-time high on subscribers. If we look at the price, it's trading right at $5.97 right now. And Spotify, if we zoom out, look at this. I mean, this stock has just been on a tear. In fact, if we go back to, look at this gain. I mean, this rivals some of the AI stocks. $72 back in 2023 to 500. Now it's, I think, just below 600, right? So you're talking about 700% gain. Now, the big question is there a level that we can play here? This is a little trickier, right? So what we have to do is we want to look for those same sort of parallels, and we want to say, okay, well, what if we connect these lows here in the near term? All right, we drag that up there, and we drag it up to the highest point. Now, if we bring this down, this is around 590. So just like Palantir, this is going to be gapping above that level. The question is, does it fade and come back, let's say, to 590 or below to get within that parallel? And again, we can kind of revisit these in trading the close just to see what ends up happening. There's no guarantees. We don't know for sure. But what we do know is historically that tends to happen more often than not. We'll see if these are outliers or do they fall within the range of what usually happens. PayPal getting crushed on the day today on earnings. So this is one stock that is down on earnings, trading around $81 per share. If we zoom out, by the way, this was an old trend line I had put in months and months ago, earlier in 2024, talking about, this is one of my favorite patterns, by the way. You'll see this on charts. You have your inverse head and shoulders kind of right here. Look at this pattern here, and then this, and then you get the breakout, right? And then it retraces to the scene of the crime and ignites. That's neither here nor there at this point because the stock is way, way up from there. This was $50 back here. It, again, traded as high as 90 just a week ago or so. But it is down substantially. First level, and just let me go back to the intraday, so it's trading at 81. First level, there's a very high risk level that I won't play at, let's see here. There's a gap fill. Actually, 79.30 is not bad. 79.30 is interesting. And then below that, there's a very good level at 76.45. So these would be the two levels for potential day trades. Again, I'm not speaking about swing trading or investing. All right, I have no idea. Investing, by the way, folks, just to be clear on this, when I go over charts, I'm looking at shorter term moves. If you ask me where PayPal is in a year from now, I have no clue, and I'm not going to pretend to have a clue. I can have a bias, but it's just a bias. But chart data is most relevant in the near term. Once you say, okay, well, let me see, what does this mean for the next 12 months or 18 months? The problem is you come into very key issues. And those issues are that you don't know what's going to happen with tariffs. We don't know what's going to happen with the economy. So there's so many outliers that or issues that can jump into play that can change the trajectory of that chart. What we do know is that there's very little that may happen over the next next 1 to 2 or 3 days, or even intraday today, and that gives us a better basis for making a determination based on probability of what could happen. But again, people out there that come out and are like, oh, my 5-year outlook on the S&P is 8,000 or whatever, like, that's just for a headline, right? Let's be fair. Even when people ask me all the time, like, well, where do you see Bitcoin in a year or 2 years? And any number I throw out is a total guess. It's a total guess. Now, if I look at the chart right now on Bitcoin, and we'll do that in a minute, what have I said? 92,000 is support, and then this 108 to 111 level is resistance. And look at how price is just staying in that range. Eventually it will break, but that's where you're going to get the better accuracy in the short term versus the long term. Okay, just a little tidbit there of good information. All right, so what is a sleeper play of mine that I'm looking at today, guys? The name is NIO. It is a Chinese electric car maker. Now look at this beautiful wedge. Okay, so it's in the lower end of the chart. The stock had run up to $7 in, looks like in September, had a monster move when the Chinese stocks were ripping. Why do I like this? I love these wedge patterns. We want to see a breakout above 440 to 445. If it can break above there, this might be in play. The other thing to keep an eye on is take a look at XPEV, another Chinese electric car maker. If we look intraday, the stock is trading up pre-market. It's also, if we look at this, it's up from $11 to basically 16, about a 50% move just in the last, basically since the start of the year. So these electric car makers are starting to get bids, and NIO is still at the low end of the chart. So this is one that catches my eye, and what I'm looking for again is a breakout above this level here, which again is anywhere between, we'll call it 445 and 440. I'd like to see confirmation obviously as well, but you do think that, if this got a little breakout, it could make a pretty substantial run, maybe up to this area right up here. So just one stock to watch that's on my radar. I do have it as a swing trade with Smart Money stocks and ETFs members. All right. Let's get into Bitcoin. All right, I'll go to the big board for Bitcoin. Bitcoin had that fantastic bounce yesterday. Again, why did it bounce yesterday? Let's all be fair. It was because the stock market bounced off of its lows. Today, the stock market is basically flat. This was a much bigger bounce yesterday than what the stock market had, right? We know that the stock market still ended slightly lower on the day after coming off massive losses. Bitcoin actually ended green, but this is the kicker. Was it net green on Saturday and Sunday? Remember, the stock market was closed on Saturday and Sunday, and if you look, Bitcoin was still net down from Saturday to Sunday, if you include Saturday, Sunday, and the drop from yesterday. So little things like that you just have to pay attention to because the stock market's closed on the weekend, but Bitcoin was obviously reacting to those tariff news on both Saturday and Sunday. Either way, on a technical basis, once again, the 92,000 level was a gem of a level, and it did create a bounce, and we still have our resistance zone right up here. So support and resistance. Now, at some point, one of these levels is going to break, right? So, it's kind of like caging a beast, right? You're chopping in here. There's only so many times it's going to chop until it's either going to have a massive breakout or a massive breakdown. And so I just want people to be understanding, like, am I buying the 92,000 level as a quick trade? No, I'm not even doing it anymore. I won't be doing it if it comes back down because there's too much risk of it breaking. Would I be shorting the 108, 110 level? Nope, because there's too much risk of it ripping higher. So at this point, it's more waiting to see which way it breaks and then looking for a significant move in that direction. But beautiful action there. Bitcoin, again, is slightly lower on the day. Going quickly to gold, let's take a look at what gold is up to this morning. And gold just continues to go up. You can see my lines from yesterday talking about maybe it just continues up and then finally pulls back to scene of the crime. And then at that point, we could talk about a move up towards that 3,000 level. I mean, could it go directly to 3,000? It could, sure. But again, that's somewhat unlikely that you would just get a constant move up. But again, we have gold now trading well above $2,800 per ounce, and it continues to be a favored place for Federal Reserve banks, ECB, you name it, China Central Bank. They're all buying this stuff, guys. And again, quite something. All right, so Gold continuing to stay strong. It is getting short-term extended, even though I still think it goes higher in the mid to long term. But again, short-term, it is getting extended. I don't have a short level on this. I have no intention of shorting it, especially with the possibility of tariffs again and new news. It's anytime you have this uncertainty in the markets, there's going to be a certain amount of money flow that's going to head towards the safety of gold. Maybe eventually Bitcoin, but not right now. It doesn't seem to be, but gold for sure. All right, next up, let's look at silver and see what silver's chart is doing this morning. If we take a look at silver, all right, so silver's behaving as the chart should suggest. Here was your support. Yesterday, you can see we dipped into that level. We pushed up and we closed. This was the beginning of a bullish pattern. It's moving up. You're getting close to that resistance I gave you at 32.25. That should be resistance. Not to say it can't break it through it, but that should be a level where it's going to be tested at least to see where it goes. All right, big news on oil this morning. Oil declining pretty precipitously. And sure enough, what did I do? I did take the rest of my short on oil off the table. Call me a wuss, you can. Instead of sticking with this trade, that's fine. I always remind myself that there's always no trader or investor goes broke taking a profit. So I was in the money over 10% on this short. On that second half, I said, you know what? Could it go lower? Could I make another 2%, 3%? Sure, I could. But I'd rather exit it. If it bounces, I can re-short it. I got money in the pocket, members of Smart Money Commodities and Miners. We made money on it, so awesome stuff there. So again, beautiful drop on oil, though. Again, I told you guys that was the likely target or downside move coming, and that's exactly what we got. Next up, let's take a look at natural gas, which had a great pop yesterday. It is coming back in. Too bad it didn't get back to the scene of the crime. Doesn't mean it can't in the next few days, but right now it's pulling back. This is just, again, a breakdown, but it's not doing anything to set us up for a trade one way or the other. So I'm just going to stay on the sidelines, right? Again, remember, we ended up shorting, I believe it was over here, and we had to wait a long time for that to hit, and then we got some good gains out of it. Same thing. The discipline is so important when it comes to trading. I can't stress that enough, is that once you start recognizing that trading less makes you more, that's something that a lot of day traders find out the hard way. When I was a new trader, I would do like 50 trades a day, right? 50 trades a day. You always had to be in something. I was like a junkie, right? And then over time, I was like, man, these days where I'm trading more selectively, I'm actually making a lot more money. And that all of a sudden starts to make sense, right? You're more selective, you're more disciplined, and that will actually feed your portfolio to bigger gains. And so we always have to remember that. It's like, be disciplined. There's always another trade coming the next day. I've never been in a scenario where I was like, oh, darn, I missed that trade, and that was the last trade ever in the whole entire world. There's always another one coming around the corner. So let's work on our discipline. Let's keep our focus away from emotion. The hype of social media is there to basically screw you and screw me, right? If we let that influence us, then that can be a real detriment. Follow the charts, follow the data. It's not perfect. It won't make us a perfect trader. I have plenty of losses out there myself, but the key is it's about the high probability setups. We want to win more, substantially more than we lose, but always go in thinking today might be the one where I lose, so protect yourself. All right, you guys have a great rest of your day. I will talk to you soon. Come check us out at Verified Investing. Take care.